Hi, I'm Brad Rosley. Thanks for tuning in again today. Our topic is dollar cost averaging and how using this strategy can help make you a very successful investor. When it comes to investing, one thing people should know and probably do know is they want to buy low. They like to buy at a good price like anything else. It's very hard to do that though at times because as prices are dropping, fear sets in. And the last thing that most people want to do is buy when things are going low, thinking the prices are going to go even lower. And that certainly happened in 2020. Taking a look at a little chart that I borrowed, this is just a simple graph of the Dow Jones Industrial Average in 2020. As you can see at the start, we went up a little bit. The market was going up, the Dow Jones. And then the virus hit, stocks got cremated overnight almost. Fastest decline I've ever seen other than Black Monday back in '87. Not only that, but the future looked bleak. We had a virus that we didn't know what it was. We were told 20 million people were going to die. Businesses shut down. The economy shut down. And the stock market reacted by plummeting. You can see the major drop there. It went all the way down in the 18,000s from nearly 30. We didn't know what was going to happen. Everything you read on the news was doom and gloom. Everything was doom and gloom. How in the world are you supposed to hang in there and buy? Let alone cheer stock prices going down. Why would you cheer stock prices going down? Well, I'll explain that in a minute. Now, since then, a vaccine has recently been developed. Hooray. We've gotten much better at treating people who do catch the virus and have an issue with it. And the stock market has recovered greatly. Matter of fact, we're at new highs right now as I speak. So what is it about dollar cost averaging as a strategy that can help you actually do well in these volatile markets? Well, when it comes to investing, we want to take emotion out of it and let everything be automated as much as possible for the average person. Trying to time this market is very, very difficult for most people. What dollar cost averaging is, it's a systematic way of buying shares at a good price. And it's simply about math. If you invest the same amount of money periodically, when the share price is higher, you'll buy fewer shares. When the share price is lower, that same dollar amount will buy more shares. It's really that simple. So let's look at another chart I've made up. Let's use a mutual fund as an example. That was $10 a share when you started. So I'm hoping everybody can see this clearly. I tried to keep this really simple. It doesn't have to be that complicated. And if you invest $100, doesn't matter if it's 100,000 or 100,000. Let's just use $100. And the share price is $10 a share. Well, that'll buy you 10 shares. Your average price per share is exactly 10. You've only made the one purchase. Now, the next month, just like what happened in our stock market in 2020, let's say the share price went up to $11. Well, now the price is higher, so you're going to buy fewer shares, 9.09 to be exact, at a higher share price. Then the market crash hits. And now our mutual fund's down to $8 a share. Well, the only thing good about that is now our $100 at $8 a share is buying us 12.5 shares, which is a lot more than we were able to get with $100 when the price was higher. The market fell even further. Your share price went down even more. Now I'm buying at $7. Well, that gives me over 14 shares on my same $100. And then the market recovered. And your $100 bought now at $10.50 a share. So now you only bought 9.5 shares. So in this overly simple example, $500 was used to purchase shares. You could have bought them all at $10 a share initially. That would give you a share price, an average share price of $10 a share. But because you dollar cost averaged into the market, your share price on average was $9.03. And now that we're back to $10.50 a share, you've actually made a very handsome profit overall in that short period of time. Now, obviously, this was a dramatic shift in the market, and these don't happen very often, thank goodness. But over time, this strategy works. It may not work this dramatically because it works better in volatile markets. This was obviously an incredibly volatile market. But you'll always buy at an average share price that is good. So it'll allow us to buy more shares when the market is lower. If I was a younger investor who was confident overall in my mutual fund or whatever investment I had, my ETF, my dividend reinvestment program, whatever it might be, if I was confident in the long-term share price of whatever I own going up, I would be doing a loud, silent, we'll call it a silent cheer for prices to go down. The last thing I wanted as a younger investor who's still putting money into this mutual fund would be for the stock price to rally, or the mutual fund price to rally as fast as it did. Hypothetically, when I use this example and the share price had gone from 10 down to 7, but I don't have that much money to put into the investment, I would love for the price to stay down near that $7 range for a heck of a lot longer if I was confident the price was going to go back up to 10, let alone much higher than that over time. Do you understand? The key is a belief in the long-term growth of the price and to automate this so that when it does go down, the last thing you're going to be tempted to do is to sell when the price is low. Matter of fact, if you're doing this, you'll probably become accustomed to trying to finding more capital to invest when the prices actually go down. So we want to automate this to take the emotion, the bad emotion of fear, to sell out when prices go down. We want to flip that around and use it as motivation when prices do go down to try and find more money to buy the investments that we believe in when they're temporarily at low prices. I hope that makes sense to you. Please check out my videos, subscribe to my website and my blog, and it's BradRosley.com, and my YouTube channel. There's a ton of videos on here. I'm focused on giving you guys, my listeners, the best possible financial plan advice. I'm a certified financial planner. I've been in business now for 30 years, if you can believe it. I can't. Fortune Financial Group is my company. Thank you so much for listening. I appreciate you tuning in. God bless America. I'm so happy to give you this information. If you have questions, I promise you to ask them. If you ask them on my website, on my YouTube channel, I will get back to you. I'd love to know what you think about dollar cost averaging and if you've ever used it for yourself. And give me an example of when it's worked well for you. Thanks a lot for listening. Have a great day.